I am Osei Rubie. All boxes checked. National Standard Abstract is presenting its first episode, the very first one, numero uno, of all the episodes that will follow after it. So we had to have the one and only Quentin Hardy of Movement Mortgage, who is the qualifier, my brother.
Good to see you. Good to
Absolutely,
see you.
absolutely. So please introduce yourself to our viewers. For those that may not be familiar with you, please tell them briefly about yourself and how they can contact you following this episode should they like to reach out to you.
Sure. My name is Quentin Hardy. Nickname is the qualifier.
That's right.
I got that nickname because I used to do a lot of transactions that other banks couldn't do, and I'd sort of swoop in at the end like a superhero. So thus the logo.
That's right.
And since my name is Quentin and it's a Q, we did that off the qualifier. Mm-hmm. So I'm still swooping in, but we do all kinds of deals. So that was a lot of renovation loans, 203Ks, home style renovation. That's still about 40 to 50% of my business. The rest of my business is a lot of first-time home buyers, move-up home buyers. I've been in the industry for, I guess, 17, 18 years. Last year, I was ranked in the top 1% of all originators in the United States. Which...
Whoa, stop right there. So when we say stuff like that, we don't just tuck that in. Okay. That's major headline. So let's, for those that don't understand, which I'm sure a lot of people that are, could you kind of rewind that, bring that back so that we understand clearly what does that really mean in the context of the entire United States and all loan originators?
Well, there's somewhere between 300,000 and 400,000 loan originators in the United States.
Okay.
99% of them don't do as much as business as I do.
Okay.
So I'm in the top 1%.
Wow.
And as we were talking earlier, only about 1% of loan officers in the United States are African American,
right,
with about 12% of our population. So it means that we are underrepresented.
Right.
So to be representative in that top 1%, coming from a 1%, I don't know how many of me there are. There's very few of us in that category. But yeah, that's it. So so I've been in the industry like I said for all these years. I'm currently with Movement Mortgage.
Yes.
Been here for quite a few years. Mm-hmm. Enjoying, great bank, great place to work. Mm-hmm. I live on Long Island, married to the same woman for going on 28 years, 2 children, thank you. So I'm a family man, big into mixed martial arts,
exactly.
Practitioner of Brazilian Jiu-Jitsu, if that's outside of mortgage. But where to find me, hopefully somewhere on the screen
that we'll have.
You're going to have my phone number, email address, and IG where they can find me on Facebook and social media. I am somewhat active in social media, putting out content, and sometimes just my silliness and my sense of humor is out there. And I pride myself on doing a good job, making sure I give good service, and almost all of my business is just referral, repeat customers, people referring each other. Mm-hmm. As you know, I'm also a published author.
Yes.
I published a couple of books. They're all available on Amazon. Mm-hmm. One of the books is a home buyer's guide for African Americans. Yes, it is different for us.
Yes.
And that's what it's about. It is different for us. It's not a better or worse. It's a different process. Mm-hmm. We're coming from a different place. My other book was How to Be a Superhero Home Buyer in the Long Island Market. And for 2022, we're going to have the third one published, which is How to Buy a Foreclosure Like a Superhero. Mm-hmm. So that'll be the third book. Don't know what the fourth one will be, but I'll keep writing books, keep doing loans, and keep having fun.
So I think that is a great encapsulation of what will guide us through today's interview. Give us and our viewers a better understanding of the process that you customize for your clients as far as prospective home buyers. And then also, of course, I'll interject and then you can also narrate regarding your experience with our company, National Standard Abstract, which provides title insurance. But go ahead.
Well, the process, it really revolves around clarity and communication. We find that most people who are not having a good mortgage transaction, they're lost. They don't know what's going on. It's stressful. Right. We have to put ourselves in the shoes of the buyer or the borrower and understand if you're buying a home, if you're selling a home and buying a new one, people are worried, is this going to happen? Sometimes up until the day of closing, they're nervous.
Exactly.
So what we do is we make sure we set expectations appropriately and continually communicate throughout the process. Mm-hmm. So the first conversation is not just going to be, hey, give me an application. We're going to talk about the person's goals. We're going to figure out and explain to them how qualification actually works. Mm-hmm. Because we find people go through the whole transaction and they have no clue. And then we're going to get them pre-approved. Typically, I'm going to send them one of my books so they have some additional information to understand the process. Then after they're pre-approved, we do a mortgage strategy call. We're actually going to get back on the phone after you're pre-approved, go over rates, fees, numbers, how the process goes from here, answer all their questions, show them different financing options, what we recommend, but we let them choose. And then they're going to go out and find a home. And then when they find the home, same thing. We're going to get back together again, go over the different options, make sure that they're picking the one that's right for them.
Exactly.
We may make our recommendations, but it's not for me to decide. We'll also explain why we're making certain recommendations and help them think through the process. Then they're going to go ahead and once the loan process is going, every week we send out a video, which obviously, 10, 15 years ago we couldn't do this, but we've added this. Every Tuesday, I send out usually it's a 1-minute video, just explaining where we are in the process, what has happened, and what's about to happen.
Okay.
Just giving everybody an update. And we send that to the home buyer, as well as to the listing agent and the selling agent, so that everybody's on the same page. There's never a point where people, what's going on? What's happening? We're letting you know. Of course, you can always call me and my team any other time, email, text, whatever, but you always know you're getting it. At the very least, you're getting a global update every single week. And people like it as a video. This is the age we're in, right? I mean, everything is video nowadays. So rather than type it out, just cut a short video. Fortunately, I'm extremely good looking, so I look great on video. So I don't I don't shy away from that.
I hear that. Okay.
So I just do the videos, and people love them. And
No doubt.
we're always asking our customers, hey, I spoke with a guy this morning, for example, before I drove here, and he said, you know what, this is my third mortgage. The other two the experience was like night and day. And I said, I hope you mean in a good way.
Right,
and if
right,
I want to make any assumptions. But that's what he said. He goes, throughout the whole process, I was not really sure what was happening. Am I doing the right things? I wasn't even sure my loan officer knew what was going on. He goes, you answer all my questions. Sometimes even before I ask them, I know what's going on. This is awesome. I'm going to recommend everybody to you. Had another client, same thing. He was telling me that. He goes, I got 2 buddies who are buying houses, and they're telling me what they're going through. I'm trying to tell them, drop your guy and go to Quentin. And I'm like, I'm happy to do that. But that's how you grow the business.
Absolutely.
Is satisfied people send you more satisfied people.
I agree 10,000%. From our perspective, National Standard Abstract, we are a Black-owned title insurance company, a father and son duo. Nadir Rubie, who's not part of this interview, he's busy cranking away at getting more deals.
Somebody's got to work.
Exactly, right? Instead of being on this wonderful vessel, filming our first episode of All Boxes Checked.
You'll get your turn, Nadir.
Exactly.
Pay your dues, bro.
Exactly. So, it's refreshing to talk to you today because our shared mission data point is Black ownership. And National Standard Abstract being a Black-owned title insurance company, of course we serve all customers, but we have a specific focus in wanting to create impact and empowerment for our own people and advancing them. So we've dedicated ourselves to donating over $150,000 of our own personal funds to Black organizations as far as that is concerned. And then more importantly, now tying it all back in, what you were talking about is awesome because your high level of service and quality for your customers speaks volumes, the feedback, the referrals, et cetera, et cetera. And then our ability to integrate now and provide title insurance for your transactions, we attempt and strive to match that level of quality, response time, turnaround time, and then managing the expectation of you and your client. So I think it's a perfect marriage in that proverbial sense.
Yes.
So definitely, I think it's very important that all the viewers understand that and understand what you do. What is big headline here? What is Quentin Hardy of Movement Mortgage Prediction, and just for the market, what do you feel the real estate market will do for the very near future now that we're here today, October 2021? What do you feel the market will be doing in the next 5 to 6 months?
I don't think 2022 is going to look a lot different than 2021, with the exception of slightly higher interest rates as far as the mortgage goes. So that'll reduce affordability to some degree.
Okay.
We saw about a 12, 14, 15% appreciation in real estate, depending on whose statistics you want to read. And I heard people saying, oh, that's fallen off. It's only going to be 6% next year. Mm-hmm. Yeah, but normally we see 3.5, even 4% is high appreciation. So 6% is still high appreciation. Yeah. It's not record, 12, 14, 15, but it's still way up there. Mm-hmm. And I'll give you a prediction that's further out than the next 6 months. I think we're on the precipice of a housing shortage. And I think it more has to do with demographics than anything.
Okay. How
The
so?
Well, we have to understand that first you've got the baby boomers.
Okay.
And that's the biggest cohort demographically that we've seen.
Right.
And they would create and destroy markets. And they created, the real estate market. And then my generation, Generation X, you don't hear about us. We're the generation, actually you're Generation X as well. We came behind the baby boomers. You don't hear about them. Now you start hearing about the millennials. But the reason we hear so much about the millennials is because the millennials are actually a bigger group than the baby boomers. So we have enough housing
Right.
for baby boomers,
Right.
which was more than enough for Gen X, but it's not enough for millennials. So what we're really seeing now is the beginning of a housing shortage.
Okay.
We didn't build enough housing over the last 10 years because of the crash. Some of the builders didn't recover. And then this pandemic, of course, reduced our capacity to build to a greater degree. So we didn't keep up in a year. So now we don't have enough housing. So it's a supply and demand issue. That's what's happening. It's people, you can't buy a house because everybody's buying houses because of the pandemic. No, it's because the millennials now have achieved the age where they're the average home buyer.
Exactly.
They're the biggest group and they're buying everything up. But the group behind the millennials is bigger than the millennials. So there's not enough housing for the millennials or the group behind them. So this housing shortage, now granted, could we have some years where there's a bit of a reprieve? Sure. But we're probably going to see a housing shortage before the building industry can keep up for maybe 3, 4, 5 years.
Interesting. So let's just recap that really quickly. So number one, as it pertains specifically to inventory levels, we see them continuing to decline.
Inventory is not.
Well, let me say it this
we're
way.
not going to have a huge burst of new inventory.
Exactly.
There's nothing that would indicate that.
Okay.
And any inventory that comes to the market is getting scooped up because the demand is still so high.
So we have insufficient inventory based on the current levels of inventory to meet the demands of these various generations. So now that even continues to support, if I'm not mistaken, the levels of increasing valuations for properties.
Right.
Talk to us a bit more about that.
Well, again, it's a supply and demand. And when people say, it's the pandemic, when the pandemic ends, this is going to cure, when we get the vaccine, not the case, because we had the lowest inventory we had seen in real estate since 1963 at the fourth quarter of 2019. That's before the pandemic. So if we have the lowest inventory we've had in all these years, that's nothing to do with the pandemic. In 2021, we now have the lowest inventory. Ooh, it's windy out here. 2021, we now have the lowest inventory that we've seen of record.
Right.
That doesn't turn around in 2022. Do we have the second lowest, or still the lowest, or a new low maybe?
Right.
But those things don't turn around in a matter of weeks or months.
Exactly. So now we can see for those that may be novice buyers, that are first-time home buyers, and/or the more seasoned within that range, we still come to the common denominator. Inventory is not going to explode as far as exponential growth.
Right.
As a matter of fact, there will be less inventory for people to compete as it is now.
Right.
And moreover, the valuations of properties because of that growing demand will more than likely continue to increase.
The 6% valuation they expect, a lot of it is simply caused by, it's like we said, supply and demand. If you've got 10 people trying to buy a home and there's only 7 homes, well, those 10 people are going to start to push the price up. That's what's happening. That's what we're seeing.
Right.
It's,
So the bidding wars that we saw, throughout the pandemic, we don't think that those will be going away. It may not be at such an aggressive pace in certain markets, but for example, I was talking to a colleague and a friend the other day, and he was saying, look, Martha's Vineyard, people are, snatching these things up left and right.
Yeah.
And then locally in this market here in Long Island, I think it's still moving at an aggressive pace. I mean, granted, there may be certain areas that may have tapered off slightly.
Well, the median home value has risen, and we have to understand the difference between mean, median, and mode. If you went back to elementary school or middle school, and there's 3 kinds of averages.
Right.
When the median is higher, it simply means that the sales price has moved up. There's more sales in the $1 million range than before. But the $300,000 and $400,000 range, or the $500,000 range, the starter home range, depending on your geography, those are the ranges that are restricted.
Okay.
And that's where people are really struggling.
Gotcha.
If you want to buy a $5 million house, it's not that hard. You can probably get one as far as inventory. You want to buy a house that's 1/10 that price, let's say the average, we're in Nassau County, the average home in Nassau County is a little over 500. that's a tough spot.
Super competitive.
And if you want to buy one for 350 or 400, good luck.
Exactly.
Now, I'm not saying don't do it
Right.
if that's what you can afford,
Right.
but understand it's going to be a challenge worthy of your efforts, but it's
Right.
going to be a challenge.
We know that there's so many market predictions, experts, people that are saying a variety of things. And my question is, you have almost 20 years of experience of being in this business and crushing deals.
Right.
So you have an intimate understanding of the vibration and trends of the market. 50% of the people, when I go to, have a conversation with a group of 10, will say, the market is excellent, Osei and Nadir. I mean, this is awesome. We're going to keep steamrolling. The other group say, oh, we're about to crash. We're about to crash. Get the parachute. I'm going to jump out. What do you think is about to happen right now? Will there be a crash or will there not be a crash?
I'm going to do you even one better.
Okay.
I'm not only going to tell you what I think, I'll tell you why, which I think is infinitely more important. Because frequently I hear people's opinions and they're not based on anything.
Okay.
So whenever I hear someone say, oh, the market's going to crash, I say, oh, really? Why do you think that? Oh, my cousin-in-law's nephew's neighbor's dentist knows a guy who used to be in real estate, and his friend told him, like, what is it based upon? So
Right.
if you have it based on factual data, let's look at the data. And I'm going to give you seven different reasons the market is not going to crash.
Let's do it.
Number one is last time we had a crash, we had a slew of foreclosures. 2010, there was about 1 million foreclosures. 2020, we had about 50,000 foreclosures. Now, granted, there was a moratorium, but there's 96% less foreclosures.
Okay.
So if you don't have that foreclosure inventory, that's one of the elements of the crash. So we're not, and then people say, oh, we're about to see a bunch of foreclosures. Well, that's my reason number two, is about 36% of homes don't have a mortgage. So those houses are out of the mix. They can't be foreclosed on.
Exactly.
They're out of the mix. Number three would be the inventory. Like we said earlier, we have the lowest inventory. 2019, we saw the lowest inventory we'd ever seen. No, sorry, we'd seen since 1963.
Right.
2020 and 2021, lowest inventory we've ever seen of record. Well, the last time there was a crash, it's because there was too much inventory. You can't have a crash if there's no inventory available.
Exactly.
And we've got, like I said, lowest inventory of record. So what is that? Is that 3 reasons?
That's
All
3
right.
reasons. Number 4.
No, well, number 4 is that the housing shortage, we already talked about that, is being caused by these millennials.
Yes.
Not pointing fingers at millennials,
Right.
simply the volume of people that want to buy a home is so much higher. Last time we had a crash, the millennials, they weren't old enough to buy homes.
Right.
They weren't around.
Right.
And Generation X was buying homes, which is a much smaller group, and the baby boomers were sort of moving out of that first-time home buyer group already, for sure.
Right.
So, we have demographically, we have a much different situation.
Number 5.
Number 5 is the financing situation.
Okay.
We all remember that there was 100% financing, 110% financing,
Yes.
home equity line of credit up to 100%. All that 100% financing is gone. So could you put 3 or 5 or 10%? Sure. But over 85% of homes have more than 10% equity. Now, what is equity? Equity is the difference between what you owe and what the house is worth. Last time we had a crash, it was reversed.
Exactly.
People were underwater. But if you're not underwater, if you owe $450 on a $500,000 home, you can sell it.
Exactly.
You're not gonna have a crash. You're not gonna have a problem. You're not gonna have a short sale or a foreclosure. You're gonna sell it.
And number 6.
But I'm gonna fit it with, but all that.
Oh, sorry.
Even the stated loans.
Right.
With all those financing situations that we had over a decade ago, are gone. Over these last 10 years, we haven't had that funky financing.
Okay.
But 10 years ago, we literally had people who couldn't mathematically qualify for their mortgage get a mortgage. We don't have that anymore. So everyone who has a mortgage now, pretty much the majority, qualified based on sound numbers. Go ahead, ask me number 6.
So number 6.
Number 6. This is one is a tribute to Biggie. More money, more problems.
Okay.
And what I mean by that is in 2019, if you totaled up all the checking and savings accounts in the United States for U.S. citizens, it was about $800 billion. 1 year later, 2020, it was 1.6 trillion. It had doubled. Now let's think about it. When people say, oh, people are suffering in 2020, a lot of people did. We know that. But we also know that a lot of people did very well.
Exactly.
And there are a lot of businesses that did better.
Exactly.
But overall, if the checking and savings went from 800 billion to 1.6 trillion, people have more money. So if this person who now has all this money in their checking and savings needs to pay a couple of months of their mortgage, they can do that. They can buy enough time to get out of the house. They can sell it.
Makes sense.
Which means it won't be a crash. They'll be able to sell it.
Got it. Got it. So the final one, ladies and gentlemen, number 7.
Number 7 is that there's about 1.5 million houses on the market
Okay.
and 70 million millennials. But behind the millennials
Okay.
is another group that's even bigger than the millennials. The next cohort is bigger. So the millennials are snapping it up, the inventory. So again, we're not going to have a crash because these people are buying, but even the next group behind them, at least last time, the group was small and there was no other group coming behind them.
Okay.
This time we have a big group of buyers followed by an even bigger group of people behind them.
Wow. Wow.
So there's no reason for a crash. This is a supply and demand issue. And you cannot have a crash if you have undersupply. That's what we have. You cannot have a crash when you have over demand, and that's what we have. So, no crash. Not gonna happen.
Facts.
And if anybody wants to dispute it, hey, bring me the statistics, bring me the numbers, tell me why. I've got 7 reasons why it won't crash. Let's say I'm off on 3 of them.
Okay.
Okay, still not crashing.
Right. No, and thank you for that overview because, whether someone watching this is in the industry or is a potential new home buyer or, a second time buyer that may be already an owner of their primary residence and wants to now buy an additional property, whether vacation rental or an investment property, this is awesome information. And
it also means don't
go
wait.
Ahead. Go ahead.
Because I've heard people, I'm going to wait till the market. No, don't wait. The market's not going to be better anytime soon.
Exactly.
There's an old adage, and I don't know if I'm about to say I won't say the guy's name because I don't know if he coined it, but he always says that in real estate, it's not timing the market, it's time in the market. So for the people who bought the house last year at the beginning of the pandemic and
Right.
the market's crazy. Well,
Right.
guess what? Their values went up 10, 12%.
Exactly.
So they spent $500,000 on a house. It's now worth $550,000. They earned $50,000 in net worth, and that's not like earning $50,000 on your job because
Right.
this is not taxable. It's not income. It's net worth. Their net worth has gone up by $50,000,
Awesome.
and it's going to go up another $25,000 this next year. So people, you overpaid for the house. Yeah, I overpaid, but now it's well over what I paid. So who cares?
Right.
But I hear I'm going to wait for the prices to come back down. I'm going to wait for the market to get better. It's not getting better for years, and prices the appreciation will slow and maybe stop. I won't even say stop. The appreciation will eventually slow, but we're not going to see depreciation in real estate in any market, in a general sense, let's say. In an individual market, we could see it, but in a general sense, I don't wait. If you want to buy a house, buy.
So news headline, everybody, do not wait. The market is not going to roll back. You may have little, scenarios in specific markets where you see somewhat of a taper off, but overall, as Quentin said, there will not be a slowdown that you should wait on the fence and think that things are going to be discounted, air quote, just using that term loosely. So definitely appreciate you making that point and underscoring that. Let's talk about your emphasis on your book where you talked about black home ownership. We want to make sure that we continue to promote, our abilities in so many unique areas with your expertise in the mortgage industry and being in the top 1%. I mean, that's a milestone, awesome achievement. National Standard Abstract, likewise, has closed over $1 billion in the first 4 years of operation for a 100% black-owned company. We, just by our sheer existence and accomplishments, serve as an example to others that we're not just talking about something, we're actually doing it, and then also creating value by creating the tools of information, demonstration of example, and also the resources by which to do it. So talk to us a little bit about your book so that the viewers are aware of the book. That's right, baby, that's right.
Well, I actually started writing my second book first, and I was inspired to write a guide to becoming a homeowner for African Americans. Yes, it is different for us. And some of it has to do with my journey. My wife and I, we both grew up in households where the parents were homeowners, And when we moved back to the United States, we lived overseas for a while, and we were trying to buy a house, and the numbers weren't right, and some of my income was from overseas, so the mortgage company was having difficulty, getting me qualified. And I said to my parents, hey, you know what, we're just going to hold off. We're going to wait a year.
Okay.
And they were adamant about, no, you're going to buy a house, you're going to stay here and live with us until you save up the money to buy a house. And we lived with my parents for about a year. My wife gave birth, actually a little more than a year. She gave birth. We were pregnant. We were pregnant. She gave birth to the baby while we were still living at my parents,
Right.
and he had his first birthday party at the new house.
Wow, that's what's up.
We'd been in the house for not even a full week.
Wow.
But what was interesting about it is I realized if we had not purchased, if we were saving, we wouldn't have been able to buy the home. And when I talk about time in the market, we bought that house. It mentioned in the book for about $160,000, and 5 years later we sold it for double, $320,000.
Nice.
Now we didn't know that the market was going to do that, but I realized that in those 5 years I'd increased my net worth by $160,000 back in 1990s numbers,
Right.
which is a lot more than it is today.
Exactly.
Simply by living in the house and paying for it. I bought a 2-family house because we needed the rent to help pay. But I realized that too many people are not in the position that I was in. I had my mom and dad help. I had my father-in-law co-sign. They had to give us more money to help with the closing costs. So there's no way that I could have done, my wife and I could have done what we did without the help of her parents and my parents. But that little push that they gave us has sent ripples throughout our economic lives.
Exactly.
Because when we sold that house and had $160,000 profit, we bought the next house in a nicer area and had enough money to also buy an investment property. And then we sold the investment property right as a few years after we bought our third home where we live now. But the first one set that trajectory.
Right.
And that's why the book is very much about get that first home. It doesn't have to be your forever home. It's a different process for us. We also know that the net worth of African Americans is statistically lower. It's a really, really low number, but it also means that most of our friends, neighbors, and relatives on our network don't even have the ability to help us buy. So it's a harder trip for us. The average credit score for African American millennials, 100 points lower than their white counterpart.
Wow. Wow.
So it's a different ball game.
Okay.
And that's a lot of what the book gets into.
Okay.
It doesn't matter if it's better or worse. It is what it is. Like I know some people, what about discrimination? And what about, hey, look, I'm not going to end discrimination anytime soon. So I'm just going to accept that it exists, and I'm going to burst through it. I'm going to do what I need to do. And that's why you're successful in your company. I'm successful in what I do. You can't live your lives on shoulds and shouldn'ts. I'm not waiting for reparations. Are they going to come? I hopefully one day, maybe. But I'm not waiting for it. People have been waiting for it literally hundreds of years, so I'm not going to wait another day.
Right.
So the book gets into the differences for us, the process to become a home buyer. And I think my favorite statistic in the book, and I say this a lot to people I speak with, and I ask people this, I said, look, if I were to tell you, and you talk about wealth and building wealth and generational wealth, if we were to say that the average homeowner has a higher net worth than the average renter, very few people would be surprised by that fact. But then I'd follow up and say, okay, according to the Federal Reserve, with their 2019 statistics, which is the latest ones that I have in my head,
Right.
how much higher is the net worth of a homeowner versus the average homeowner versus the average renter? And I ask people, is it double, is it triple, is it 5 times, is it 10 times? And no one ever guesses. It's 44 times.
Wow.
And you got to let that sink in.
Wow.
According to the Federal Reserve, these are not my numbers.
Right.
The average homeowner, has 44 times the net worth of the average renter.
Wow.
So the single greatest thing most people can do for their financial success is become a homeowner. The single greatest thing they can do for generational wealth for their children and their children's children is to become a homeowner. You want to do cryptocurrency and invest in stock and flip houses, and there's lots of things you can do. But simply, something very basic is owning your own home. And rather than letting your rent, most likely your landlord is not even in our community.
Right.
So if you are renting, you're helping a transference of our wealth from our community to another community.
Exactly. Exactly.
And then even if your landlord is in our community, okay, you're simply transferring the wealth from our community to someone else in our community, but it's not you.
Right.
So
Right.
for purely selfish reasons, you want to own a home. And the first home we owned was not in the nicest neighborhood. And the house was not in good condition. But we had a 5-year plan, and we moved out.
Excellent.
You don't have to be there forever. So the book is very much about helping people understand the process, encouraging them to do it. And I send the book to people, I mail the book to people, read the book, after you buy your house, pass it to a cousin, give it to somebody. Because again, looking at statistics, we've got this huge wealth gap, and you just Google wealth gap, black wealth gap, racial wealth gap, and look it up. It's frightening, but it's getting worse. And when we look at statistics on home ownership, virtually every group in 2019, 2020 statistics reached, I think, white America reached a 19-year high for home ownership.
Wow.
Latino Americans, gay Americans, any group, however you want to separate them, had a high, except for one group which had a decline. And I don't have to tell you who it is, it's us.
Wow.
We were the only group that had a decline in home ownership. But if the average homeowner has 44 times the net worth, we had also a decline in wealth. And unfortunately, and this is a scary thing, according to, there's some statistics out there, Forbes magazine even published it, by the year 2053, we're going to be in an average, African Americans will be in an average of 0 net worth.
Wow.
And at that point, we're economically insignificant. We're economically extinct. We're in a position where at that point, we don't matter in this country anymore. Because, let's face it, money talks. How do the politicians get elected? By money. And the tax base, and then who are their constituents? Whoever paid. So if we're renting and we don't have wealth, there's not going to be enough of us to have a voice, and then who knows what happens?
I mean,
we don't mean anything in the country.
No, and I think you gave a wide range of very strong points when you talked about the statistics of the projection of 2053. Going back, from the last point, going backwards to just kind of put it in context. And I think it's important that the viewers understand that, home ownership, as you said, one of the more basic steps that can be taken as opposed to complex. Complex would be, thought of as a cryptocurrency, stocks, flipping houses, and so forth. That the necessity of a place to live actually can technically multiply your net worth.
It's
44
money
times as opposed to a renter.
You're spending that money anyway.
Anyway, right, exactly.
So
exactly.
Spend it so that some of it stays with you. That's
exactly,
all.
Exactly. And I think that's an awesome point. That is a very strong point. And hopefully it resonates with the viewers as they're watching this episode. With another aspect that I wanted to touch on also. So we talked about the market crash. Will it crash or will it not? We talked about, inventory levels and, increasing or decreasing. So now, National Standard Abstract.
Yes.
Tell us your experience with National Standard
Who?
Abstract. With National Standard Abstract.
I was there at the beginning.
That's right.
I don't know who your very first customer was, but I was on that list.
That's right.
When National Standard Abstract was getting started, and you said, all right, who are we going to go talk to?
That's right.
You probably said, we don't even talk to you. Just send him an email. We'll talk to him later, but we know Q is on board.
No doubt.
Because I got your back.
No doubt.
But yeah, you and I were doing business before you started National Standard Abstract.
That's
so
right.
I was so happy and proud when you did.
Thank you.
I was happy and proud the first time I got to meet Nadir, and I saw
that's
him,
right, that's right.
and it became a father and son black-owned enterprise. Actually, that was very cool to see.
Yeah.
And I continue to support. But as you also understand, I'm a professional. I can only support a business that's supporting my business.
That's right.
So if you were a screw up, no, I would not have supported you.
Right. That's right.
So National Standard Abstract, the service has been excellent.
Thank you.
If there was ever a bump in the road, I could call you and it would get fixed.
Yes.
If there was something out of the ordinary, I've called you and said, hey, I need help on this. This is something unusual. And at least I thought it was unusual. You're like, oh, I've seen that before. Everything, if I thought it was unusual, like, no, I know what this is. I know who to call. And that's what we want.
Absolutely.
I know, like when people come to me for renovation lending, I do all kinds, but renovation lending, I'm not going to see anything I haven't seen. And that's one of the things that's valuable when people say, well, what about this? And what about the look? I've seen it. I've done it as a customer myself when I bought my properties that I did renovation loans on. So I get it. And that's what I see when I call you. Is it might be new to us. This is a 1 in a million thing. Goes, yeah, but I've done 10 million transactions, so I've seen it 10 times. I got it, and that's been very comforting because to have a good partner that always gets it done.